All right. Cool. So we're up and running. All right. So good afternoon, folks. So let me just take my roll and see who is here, who's not here yet, who will hopefully be here. We know we're in mock season, so we know things are a little not as per usual, right? Okay. So seeing Aya's here, Yuri here, Jordan here, Kelsey is here, Logan is here, Marcus is here, Nyla, Paige. 1, 2, 3, 4, 5. 5 and 4 is 9. Oh, Valentino is here. Didn't see him in the corner. Quite quiet. Where's Liam? Right. Hey Liam, good afternoon. How you doing? Good to have you on. Yeah, man, my vibes. Okay, cool. All right. So I just need to open a file, my other laptop, and then we will start starting. Do I need to open it, boy? I wonder. I'll open it in case. I'd rather have it and not need it than need it and not have it. And I have to go get my water. Cool. This item. This item, I do one. Yo. Hoodie. It depends on which part of my life you're asking. Like, if I feel like I was a teenager and had that kind of money, then no, I couldn't do it. As an adult, no. I might have wanted to. All right, that's Sequoia Moon. How are you doing, Sequoia Moon? Good afternoon. Have you start shortly. Today we're going to take a little review of control accounts. Oh, let's do that. Let's go. Just giving people a minute or two again, and then we'll start starting. Okay. Oh, there you go. Oh, here's Aliana. Hey, good afternoon, Aliana. How are you doing? Set squares. You actually could put them next, like on top of each other, and kind of slide them along. So basically create like a right angle thing with a particular measurement. So like if you wanted to get, so instead of having to like shift the take one and then draw like a 4 centimeter and then shift it and then measure again. It's actually it's easier if I show dividers. So basically it's like on maps, you could actually, so let's say you wanted to travel a particular distance. So what you do is you open that to, let's say, the 1 mile mark or 5 kilometer. You go on your start point and you basically just kind of like itsy bitsy spider kind of thing until you get to where you had to go. Or you could do the reverse. You could open it to like a 1 kilometer and then just kind of do that. And how many ever you do, that's how many kilometers it is. That's why it has metric. Okay, cool. Did I put that out? Yeah, I did. Okay, right. So, folks, what I was saying. All right, I have to open this. Right. That's nice. 1, 2, 3, 4, 5. I'll do one more copy just in case. And we'll do one-sided. Oh yeah, you doing maths? Okay, right. I'll still do 6 copies just in case. Well, I'll just staple up yours, right? And then I put more to print for maths class. Hey, good afternoon, Anissa. How you doing? Good to have you on. What's that? Okay. Well, I could save for your paper in the meantime. Paper wasn't the best quality, so if anything is illegible, let me know and I'll send you guys a soft copy on WhatsApp, and that way you can just kind of see from there. Right? All right. Okay, folks, at long last, let's take a swing. Afternoon, everybody on TikTok. Hey, Deji, you're back, bud? Yeah. All right. How are we doing this? Just gonna put some more math papers to print. Sorry. Cassie. Hey, Cassie, good afternoon. How you doing? All right, no worries. We're now going to start. All right, cool. All right, so folks, let me just pull up my file here so we can make a little bit of notes. There was something I wanted to pull up here too. What was this? All right, so folks, I'll send you guys this in the chat as well, right? All right, so one topic that people often find they have, well, in any case, guys, we're revising for exam, right? Both mock and the final exam. And one topic I like to start with, or maybe put early on, apart from income statements and balance sheets, is control accounts. Because for some reason, this gets bungled in school. I don't know what they do. But anyhow, but long story short, you know me, I don't like to really talk from static notes, but in the interest of kind of saving some time, because I started a bit late, I'll talk from here and I'll send this page in the chat as well, right? So what a control account is part of your control system. What control means is that you're trying to make sure that the information you have is accurate. So you need cross checks, right? So you need another way to kind of make sure your information is right. And how this does that is that it allows us to summarize an entire ledger. Now, how does it do that, right? Basically, what happens is it takes the information from the books of original entry, the journals, and uses the summary figures to create like a single account to represent the entire ledger, right? So this makes it easier to determine certain totals or balances, and it also allows us to double check the accuracy of double entry in the ledger. Right? Okay, so you have to know how to do two control accounts for CSEC. You have to know how to do the debtors control or sales ledger control account, and you have to know how to do the creditors control or purchases ledger control account, right? So what I'm gonna do, we're gonna talk to this, but I'm gonna put it in the in Excel one time, right? Now those online, I sent a file in the chat that has all the questions, and the PDF is actually fillable. So it's actually the same PDF. No, sorry, not this one. This PDF here. So every question will have, well, two accounts next to it, right? One for the debtors control, one for the creditors, and they're both fillable. So you can click into it and type, right? So what we'll do initially, right, is we will talk through the format, as in what goes on what side, and then we'll start trying questions. So here's mine. Hey Mandeep, good afternoon. How are you doing? Guys? Yeah, good afternoon, Mandeep. All right. Just give me 1 sec to put my little format in here. Leave yourself. Okay. Right, so we'll do like a 30 with that. Pull that across here as well. Just to get out here. Come on, let's zoom in, shall we? That's a little big. Let's go back out to about 200. That should be fine. All right, so I won't worry about the date column. All right, so of course this is the details. That's the dollar signs there. Right. All right, so this is the template. No, yourself. Template. Let's pull out across. All right, so AR. Okay, so we're first going to talk about the debtors control account, or the receivables control account. Receivables. Okay, so let me just kind of give some context for this, right? So imagine you had a business and you were selling to people in school. Let's say you were selling them stationery, like pens, packs of paper, that kind of stuff, right? And everything would be nice and hunky-dory if people paid immediately upon receipt of the goods. So they come by you and say, hey, I want 5 packs of paper. How much is that? You say, well, 5 packs of paper is $100. And they gave you 100, and you get the paper, and they went in their merry way. Everybody would be happy. Sorry, 1 second. That's in Yuri. Hey, Yuri, good afternoon. How are you doing? Yeah, Yuri, we're doing some control accounts today. So I now start to discuss this one, so you didn't really miss anything. All right. Okay. Yeah, so like I was saying, so you have a little stationery business in school, and when you make your cash sales, everything flows smoothly, right? People give you money, you give them what they want, everybody's happy, right? However, you have some people who say, look, all right, sorry, John, how are you doing? Good evening, yeah. Yeah, so you have some people who say, look, I don't have the money today, but I just want 1 pen. I could pay you the $10 tomorrow. And you're like, all right, that's small thing, right? So it was just one person that first time, and you remembered who it was. So the next day, and they were honest too. They came and they say, hey, look at $10 from yesterday. Okay, cool, no problem. But then word started to get out that you allow people to buy things without paying for them right away. And you could pay the next day. So people started coming. Hey, I forget my pens at home. Or hey, I need paper for this exam. I could buy this and pay it tomorrow. And like, okay. So when it was 2 people, that was cool. But then 5 people at a time, 7 people, 10 people, then 20 people. Like, wait, hold on, I had to write this down. So the first thing is you have to write it down, right? When business starts to grow, it becomes a little more difficult to manage unless you have proper systems in place, all right? Now, you wrote down stuff, and then some people, you didn't have to go and remind them. They came and say, hey, I have money for you. Look your money. You're like, all right, brilliant, thank you. Other people, they had to go and find them if they wasn't in school, or they had a retreat that day and they weren't in school, or they stayed home and they were sick, whatever the case was. And you're like, well, this is a bit annoying. And decided maybe I could just stop doing this. But then you realize, hey, the majority of people paying and I'm making real money. So maybe I could take on this headache. I'm getting more money for more effort, no problem, right? But now, as time went on, business grew, and this credit side of your business kind of took off too. So now instead of just 10, 15, 20 people, you have 100 people who owe you money. So you had to keep track of that. So that is another problem, right? Now, you find you're keeping track of stuff and you think that you're keeping track properly, but I mean, you're only human. So inevitably, you have a typo here, you put the wrong figure, you put the wrong item, you spell the person name right, you go looking for the wrong person, it mix up the orders, that kind of stuff. So you're like, hold on, I have to have something in place here so I could cross-check how many, well, who owe me money, how much they owe me, and if they pay me, that kind of stuff, right? And if you realize, hey, keeping 100 accounts is pressure, right? So what you happen upon is this particular system called a control account. And what it does for you is because at the end of the month, now when you want to know how much people have for you, you have to go through 100 accounts, balance them all off, and add up all the balances, right? And that takes a lot of time, right? I mean, if you have an accounting software package, that could do it for you, right? Or you even, okay, cool, right? So I'll get back to you when I have a chance in class now, right? Yeah, so you see, all right, cool. This system, so what this system does is it pulls information from the books of original entry and it pulls the summary information. So what I mean by that, for example, for your debtors, right? Debtors are people who owe you money. Why? Because you made credit sales to them. Okay, cool. What book of original entry or what journal records credit sales? The sales journal, right? So you go to your sales journal and you go to the very bottom and you say, hey, that's my total credit sales. I'm going to put that in this account here because the total credit sales, sorry, the total in the sales journal is the total of all the credit sales you made in that period. And if you go inside of your sales ledger where you have all of these individual, all these 100 accounts, and you go and you add up everybody's sales, it's the same figure. Those figures in the T accounts came from the journal, right? So instead of going to the T accounts and adding up each one individually, you go to the source, the sales journal, and that should be added up already, right? Now, check it. Debtors or receivables is an asset. It's classified as an asset. Sorry, just now, hold on. Right. Okay, cool. Yeah, so sorry, what was I saying? Right, so your sales journal, so your debtors. So your debtors or receivables is an asset. Why is it an asset? Because these people owe you money. And part of the definition of an asset is that assets also are not just any resource that the company owns and controls and uses to generate revenue, these kinds of things. It also refers to any benefit that the business can presently expect to receive within the foreseeable future arising from a past transaction. So you have past, present, and future, right? So any benefit that the business can reasonably expect to receive within the foreseeable future, right? And as an asset, it would have a debit balance, right? But in any case, when the credit sale is made, right, we have to debit the debtor's account. So you'll see credit sales on the debit side. Now I'm skipping a line. So those of you who are, those of you who are, what do you call it, copying, I would advise you to copy this stuff down in the one of the formats I gave you. So skip a line at the top, leave the two top lines blank, right? So credit sales or sales journal, right? So that figure goes on the debit side, right? It's on the debit side because it increases the asset. It increases the amount of money that the debtors owe us, right? That is basically the primary reason that we have debtors in the first place, right? Okay, cool. Now, we have other transactions. Sorry, 1 second. Yeah, Tony, I was going to tell you that your teacher's the one correcting me, and she's the one submitting the marks to CX. So you kind of really had to do what she says, and especially if she owed me, she's not going to want to take on anybody else. I've heard about teachers from your school already. So maybe just tell her that you made a mistake. Because if she's going to get trouble and kick up off us, you might as well do what she's saying. The only other thing to do is to get the ministry involved and make her change what she's doing. But you'll see us going to that line. Okay, sorry. Right. Now, what other transactions do we expect to have with a receivable, a debtor? Now, when people owe you money, what do you hope they do? You hope that they will pay you back. Now, if somebody owes you, let's say, $100 and they pay you back 20, how much money they have for you now? 80, right? Oh, sorry. Let me just let in Aisha here. Hey, good afternoon, Aisha. How you doing? Good to see you. Right, so we're doing control accounts today. Aisha, a bit of revision, right? So we just started talking about the debtors control account, right? So debtors or accounts receivable, people who owe us money specifically from credit sales. And a control account summarizes an entire ledger. So if you have a ledger with T accounts for 10, 25, 50, 100 debtors, it's going to be tough to go through all of it. I mean, it needs to be done, but you also want a cross check. So what the control account does is it summarizes all of the accounts in the ledger. So it basically pulls all the accounts into one. And how it does that is it goes to the books of original entry and pulls the summary figures from there. So the primary interaction we have with our debtors and what gives rise to the receivable is credit sales. And it goes on the debit side of the debtors account. Reason being, this is an asset, right? Because it's a benefit we can reasonably expect to receive within the foreseeable future. And when we make a credit sale, this is basically what creates the debt in the first place. It establishes the money owed to us, which is an asset. So therefore, it's causing the asset to increase. And the double entry rule to record an increase in an asset is the debit, right? So remember your AID, assets, A, increase, I, with debits, D. AID, assets, increase with debits, right? So this is your first and primary transaction with your debtors. The next transaction that you hope happens is you hope that they pay you back. So if somebody pays you back, do they now owe you more or less money than before? Less money, right? So so if they pay you any money, that results in a decrease in the debtor's balance. So it's a decrease in the asset. So if assets increase with debits, right, then if you have a decrease, it goes on the opposite side. And the only other side, the opposite side in any T account, the opposite side to the debit side is the credit side. So on this side, you'll have receipts from debtors, right? You could always just put cash or bank or that kind of stuff, right? Okay. So those are the two primary items that should exist in any debtor's control account, right? Now we have a few more, right? What happened? Huh. Right? Okay, cool. Okay, cool, right. So Google Meet, just give me a quick G if you guys give. I know it's just two items, but I just want to make sure we understand the very, very basics, right? Are we okay with those first two things and why they're on the size that they're on? If you're good with that, give me a G. If you need me to re-explain, it's not a problem. Just give me an R and I will do that, right? Right, I'm in class people. Are we okay with what's on the screen so far? Any questions, problems, issues, questions? No? All right, cool. All right, cool. So 10 out of 12, not bad. So the next two will let me know what's going on. Cool. Right, R, okay. So just to recap, right, just in case anybody, right, so what we are doing here is creating a debtors control account. It is a summary account of all of our debtors accounts in the sales ledger. So instead of going through 10, 20, 100 individual accounts and having to add up all the individual figures, right, to find out how much money is owed to me, I create this summary account and I populate it using the information from the books of original entry. Sorry, give me one quick second. I want to put some stuff to print it from a maths class. Right, sorry. Go back to this. Yeah, right. So if it's debtors or receivables, the initial transaction that caused the debtor to come into existence, or the receivable to come into existence, right, in the first place was credit sales, right? Credit sales will go on the debit side because when you make a credit sale to an individual or a company, they end up owing you money. That's an asset. And because of the transaction, the amount of money owed to you or the asset is increasing. And to record an increase in an asset, you debit the asset account. So this is the T account here, and this side is the debit side. So any entry on this side causes an increase in the amount owed to us, an increase in the asset. All right. Now, the other side of it is that anytime they pay us back, they'll end up owing us less money. So when they pay us back, it will decrease the asset, cause the amount of money owed to us to decrease, right? And to record any decreases in assets, we record those items on the credit side of the assets account. So debits the increased assets, credits the decreased assets, right? Sorry, one second. Hey guys, so those who went in Monday, one of the girls who was leaving on Monday, her uncle was pulling out and somebody ran into him. And she didn't just shoot, she tell me, next accident now happen outside. Anyhow, right. So when they pay you back, you have to, hold on, sorry. Right. Hey, Jaden. So joining me, you had a pay. That was my actual class. And they get the content and all the notes and stuff. There's just a backup recording here on TikTok. But I mean, you could see what I'm doing with them. You just don't have the follow-up stuff. You could join the class if you want. All right, cool. So receipts from debtors, right? Okay, cool. Now, we have other transactions with our debtors that cause them to either owe us more money or owe us less money, right? Now, the transactions that cause them to owe us less money are a little more intuitive, a little more, I don't want to use the term common sense, but a little easier to understand, right? Now, if you sold debtors some things and let's say some of them were defective or the wrong color, or the wrong size, what would you expect them to do? Keep it or send it back? Send it back. So when they send goods back to you, is that a return out or return in from your perspective? A return in. All right. Now, if the debtors, okay, so let's say they bought 4 items at $100 each. So the total is 400, right? Yeah. If one of those items was defective and they sent it back to you, they would have sent back 100 worth of goods. So initially they bought 400 and they sent back 1. So how much is still owe you now? 3. But they owed you 4 and they sent back 1. So what they send back causes the debt to decrease. Does that make sense? Right. So whenever you have a returns inwards, you have to put it on the credit side, right? Because when they send back goods to you, it causes the amount of money owed to you to decrease, right? So returns inwards, right? Or you could also call it sales returns, right? Okay. Right. So, and again, it goes on the credit side because if your debtors return goods to you, they now owe you less money than before. So therefore, the asset has decreased, and to record a decrease in an asset, you have to credit the asset account. Okay. All right. Let's do a couple more. All right. Now, one of the other things that interactions with our debtors that causes us to, I don't want to say lose money, but that's kind of what happens, is sometimes you encourage people to pay a bit more quickly by offering them a little amount off. When you offer them an amount off, what was the technical term for that? Begins with a D. Discount, right? So what the discount we offer the debtors is discount allowed. So if we, for example, had somebody who owed us $105 and I say, look, just give me 100, knock off the 5. What I've done is I've decreased the amount of money that I can expect to receive. So I've decreased the asset. And to record a decrease in an asset, you have to go on the credit side. Yo. You what, sorry? You what? Oh, that's a chord. C-H-O-R-D. It's a semicircle, right? Yeah. And it's a straight line from one point on the circumference next to that doesn't necessarily part to the center. It was just circles, not circle theorem per se. Just regular geometry. All right. Discount allowed. Okay, so I know there's only 2 items, but Google me. If we are good with those 2 items, and why they're on the credit side? Because they both decrease the debtors balance. Just give me a quick G, fees and tax. All right, and in class, people, I know there's only 2 items, but are we okay with those 2 ones? The returns in and the discount allowed. Yeah. All right. Cool. Oh, Jaden, I had to get a format to fill in. Sorry. But you can write it down for yes. Actually, I have a couple of spare question, people, so you can always use the back of that one and then use the front of this one if you need, right? All right, I'm just checking people here. Okay, thanks for responding. Almost everybody, boy. Wow. Good job, guys. Mr. All right, great. Glad to hear that. Right. So we have another item I want to put here. Now, there's a phenomenon that happens sometimes where debtors cannot pay us back at all. So whenever somebody can't pay us back because they're gone bankrupt or maybe they died and didn't leave provisions in their will or instructions to pay us back, we have to write that debt off as bad, right? It's become an uncollectible debt or a bad debt. So if somebody owed us 100 and then they disappeared and we can't get any money, then we can listen to it. We can no longer reasonably expect to receive that money at any point in time in the future. And if so, it fails the test. It fails to meet the test of being classified as an asset. So therefore, it can no longer be classified as such, right? So we have to remove it, right? So assets normally have debit balance. Oh, sorry, I was supposed to put that in, my bad, right? Right? So the opening balance, right? The opening balance normally goes on the debit side, right? Right? You don't have to put both balance brought on opening bar. You can put either one. Sorry, I forgot to put that in earlier. My bad. I apologize. Right. So sorry. So if we have a balance inside of here, or maybe it was a new credit sale in the current month, right? Right. I had accident. Yeah, Jade Norton. Yeah. Right. So if we write off a debt as bad, you have to remove it from the account. Right? In the account, the debts are stored on the debit side. To remove it, you have to go on the opposite side. And the opposite of debiting is crediting. So you go on the credit side and put bad debts or bad debts written off. Right. Okay. 1 sec. You could copy that down. Let's not check out. I have to open the wrong file. That's what I'm doing now. Just trying to open the right file. Right? But long story short, anytime you get a question with a control account, you can analyze each of the items by asking yourself, does this first of all affect the debtors or creditors balance? And if so, how? Does it increase it? Does it decrease it? What side does it go on? That kind of stuff. Sorry, I believe I clicked the thing. Oh, that's zooming in. Right. 1, 2, 3, 4, 1. Okay. Okay. Now let's talk about some stuff that might increase the amount of money owed to us, right? So these items, I don't like to call them irregular because they're not really irregular. They're just, well, on the other side. Okay. Now, sometimes if you take too long to pay somebody what you owe them, they'll charge you interest. It's like a penalty, right? And if they charge you interest or a late penalty, what does that do to the amount of money they owe to you? Sorry, if you charge somebody a late payment penalty or interest, do they now have to pay you more or less money? More money. So what you've done is increase the amount of money owed to you or increase the asset. And of course, any increases of the asset go on which side? Debit side. Right? So interest on overdue debts. Overdue amounts. All right? Cool. Now, we have a couple of interesting ones here. We have, you all remember bank reconciliation statements? You all remember, well, we do not, and maybe not next week, but the week, actually no, it might be next week, yeah. So, you all remember something called NSF checks or bounce checks? Right. That's when somebody paid you and with a check, and it turns out that they didn't actually have enough money in their account to honor the check. So what happens is the bank will send the check back to you. That's why we call it a bounce check. It bounces back to you. So when we receive money from debtors, we receive either cash or bank, right? If they give us a check, we would record it here. If the check bounces, it means that we didn't actually get the money. So we kind of have to undo the receipt or undo the credit. To undo a credit, what you have to do? Debit the account. So if you have any dishonored or NSF, which stands for not sufficient funds, checks, they will go back on the debit side, because basically when you thought you got paid, you entered the credit entry to reduce the debt. But because you didn't actually get any money, your debt didn't actually go down. So you have to go and put the figure back on the debit side to kind of re-increase the account. All right. So dishonored or NSF, sorry. Checks. Wait, sorry. One. The mobile, what is it, me? Well, anyhow, I'm not talking about a potential sponsor partly on the line. Right. Okay. I have one more item here, then I'll check and see if you're okay with it, right? Okay, so check this, right? Suppose somebody owed you, so let's say the sale amount was let's say the sale amount was $55 and they owed you $55, right? But for some reason they paid you $65. If they paid you too much money, you wouldn't just keep the money. I mean, I should be dishonest. So I should say, it's not, but you gotta send back the money, not so? Right. So what do you call it when you give somebody back money? That's a, you got an R. Refund. Right. So you had to refund them the money, right? So, all right. So basically what happens is that the credit entry was too much. So when you give them back the money, you have to go on the opposite side to record you giving them back their money. So the opposite side to the credit side is the debit side. All right. It was time to move on, right? I think we covered all the basics and even some of the rearrangements and thing. And I wanted to stop 2 sessions, well, after, but we have people doing mock, people need to revise other things, you know, so let me do that. Right, okay. Before I go on to the other stuff, so for these 3 items here, Google Meet, if you guys are good with those 3, give me a quick G. If you need me to re-explain any of them or all of them, give me a R, and let me know which one or which ones, all right? In class, people, are we okay with those 3 items on the debit side there? The interest, the dishonored checks, and the refunds. Right? If you have any questions, now is a good time to ask. All right. All right. 11 out of 12. Boy, what? Yeah. Go ahead. Ask your question. No problem. On WhatsApp. I see no question on WhatsApp. Why is refunds debit? Okay. Why do we put refunds on the debit side? Okay, cool. So a refund is where we pay people money back, right? Now, this basically is to kind of undo where they pay us too much money. Now, when a debtor pays us, as you can see, it's entered on the credit side. So if the amount paid to us was too much, we have to send some money back. And to send some money back, you have to do the opposite of when you have to record it on the opposite side of when you receive the money. So when you receive the money, you will put it on the credit side here. Because when you receive money, it's decreasing the assets, so you record on the credit side. But now we have to send back some money. So if you have to kind of unreceive the money, you have to kind of uncredit it. And to uncredit it, you have to go on the debit side here, right? The other side of the transaction is if you are actually paying somebody money and your cash book or your cash account gets involved, you will actually enter that on the credit side of the cash account or the bank account, right? Because when you pay money, when you pay somebody money, the amount of money you have will decrease. Money or cash is an asset, and to record a decrease in an asset, you have to credit the asset. So if you have your cash account and you credit your cash account, you have to debit the other account affected, which is the debtor's account. All right, okay. So, Miss Lady, if that helps, please let me know. Okay, brilliant, lovely, thank you. Right, so we have a couple of irregular or not very intuitive items we're going to put in just now, but hold on, I have that right. So normally, right, the closing balance, right, so closing debit balance, right? Now, it might seem kind of weird that I say closing debit balance and it's on the credit side, right? The reason it's on the credit side is because the balance is brought down on the debt on this side. All right, so this balance here is brought down here. Sorry, who's that? Oh, there's no one. Hey, good afternoon, Noah. How are you doing? Good to have you on. Just mark your present, right? Yeah. Yeah, Lily, but that's all right. Don't worry about it too much. We're doing some control account revision here, right? We're still talking about the debtors control account. All right, so let me just mark you here and that Jaden is here too. Oh, I didn't have Kathy. Right. Okay. Right. So we have all of the kind of regular stuff here, right? Now we have a couple of what I like to call irregular items, right? So remember how I talked about with the refunds, right? A refund would happen if you have to pay a debtor back some money, most times because they overpaid, right? Now, if it so happens that we didn't pick up on that item before we closed off the account, before we balanced off, what would happen is we'd end up owing the debtor money. Anytime you owe anybody money, that's classified as a liability. But what we don't go and reclassify the whole thing in the creditors account. No, right? All we do is we actually have, right, balance brought down, right? Opening credit balance, right? So I like to call this a slightly irregular item because, right, it's what I was going here for a way. Hey, Mrs. Ramley, how you doing? Yeah, it is an item that it is actually there relatively often, but again, it is a little strange because this is an asset, right? Assets have debit balances. Why would an asset have a credit balance? Now we do have a precedent. There is another asset or there's another item we normally regard as an asset that can have a credit balance, and in which case is actually then classified as a liability. What is that item? We mentioned it once or twice today already. What other item that we normally think of as an asset can end up with a credit balance and then be reclassified as a liability? Bank, right? When you overspend money from your bank, you end up with an overdraft, and a bank overdraft is a liability. Now, the slight difference here is that yes, when you owe somebody money, even if they're a debtor, that is a liability. But what we're saying is because of the nature of the relationship, we sell to them. We're not going to go in the purchases ledger control account, right? In the creditors ledger and put them there. We keep them here. We just show that, hey, we owe you money, right? And if you could have an opening credit balance, you could also have a closing credit balance. And of course, it's going to be brought down here. Oh, no, leave yourself. Okay, right. So that is one of the slightly irregular items. Right. Khadija, hey, afternoon, Khadija. How are you doing? Correct. Right? Yeah. If we have money for them for any reason, they overpay or we overcharge or whatever the case is, right? Right. And there's one last item here which causes people a bit of a headache, but it's not actually that hard. So let me explain, right? And it goes right here. And I'll tell you what it is, right? So it's called a set off, right? Now let's do a little example, a simple example, so we can kind of understand the concept, right? So let's say, all right. So Chris owes Jadon, let's say $10, right? But Jadon owes Chris $10 too. So if I owe Jadon $10 and he owes me $10, do we actually have to pay back each other? No, we could just call it square or call it even, whatever you say, right? So what that means is we kind of, that there is literally the set off. A set off is what I like to call, right, set off is a cancellation of common debt, right? So if I owe Jaden 10, he owes me 10, we could cancel that, right? Okay. Now let's say we changed a little bit. Let's say I owe him 12 and he owes me 10, right? 3 cameras is just flexing. Yeah, well, I'll do. Anyhow, right. So if I owe him 12 and he owes me 10, do we still need to pay back each other the full amounts, or do we have a shortcut here? I could just pay Jaden back $2 because 12 is equal to what? 10 plus 2. So even though I owe him 12, I still owe him $10 plus an extra 2. And he owes me $10. So guess what we could do? Still cancel the 10 and just have me owe him the 2. So a set off, as I say, is a cancellation of common debt, the same amount on either side. Now, what does cancel imply? Does cancel imply increase or decrease? Well, if I cancel the amount that you owe me, is that a decrease or increase or neither? Oh, if he owed me $10 and I just cancel it, does he not owe me nothing? Right. Correct. It's a decrease. Very good, Mrs. Rambo. Yes, it's a decrease. That is correct. Right. So in the case of where it goes in the debtors control or the receivables control account, it will go on the side on which we record decreases. Right. All down to the follow. And on what side of the debtors control account do we record decreases? The credit side, because it's an asset, and to record a decrease in an asset, you have to credit. Actually, we were here kind of on Monday and Tuesday entertaining the kids. And my wife was watching us, and she's like, she pointed out, like, Chris, write that. I'm like, that's page. So I had to explain where it came from. She laughed. Right, contra entries. Right, I've also seen it called contra entry. So that could be something I might look out for. Right?
Yes,
So I'll put that one in red. Right. Okay, so what I'm going to do, I'm going to send this as a pic in the chart. Sequoia Moon. Yes, talk to me. What's up? It does actually go in the creditors control also. I just didn't get to that account yet. So, yeah, so it won't go on the same on both sides of the same account because then it'll cancel itself, right? So if you're thinking about your cash book when you have a contra entry and you have an entry on the debit side and credit side, remember on one side it's under the cash column and on the other side it's under the bank column. So even though it's on both sides of the same account, that one item, the cash book, has two different accounts compiled in it. Does that make sense? All right, cool. Yeah, no problem. Thanks for asking that question. I appreciate it. All right, let me just see if we can focus. Aha! I think I got it there. Crop off some of the edges. Sorry. All right, cool. Undefined means that we don't have an understanding. When you define something, you state its meaning or its definition, right? If something is undefined, like if you were watching something and it was not well defined, you can't understand what you're looking at, right? If we divide by 0 in mathematics, we call it undefined. Reason being, okay, what is division? Division is where we repeatedly subtract the same number until we get 0. So for example, if you did 6 divided by 2, it means you're taking 2 away from 6 until you have nothing left, or until you can't take it away again. So how many times you could take 2 away from 6 until you get nothing? 3 times, right? If you were to divide by 0 and you repeatedly subtract 0, will you ever? No. So therefore, some people say it's infinity, but that's not a correct definition, right? So we have no understanding of what it does, division by 0, or if it can't even be done. So that's why it's called undefined. Right. Okay, cool. Right. So, ladies and gents, what we are going to do now is we are going to go to the, hold on one second. Yeah. So we're going to go to this question here, which is Lara Bryan. Right. Jaden, I gave you a Lara Bryan paper, right? Okay, I'm just going to give you a copy of the answer sheet so you can fill it in, right? All right, folks. No. That's not what I want to do, sorry. What I want to do is this. Oh, okay, cool, no problem. All right, so it says here, Lara Bryan has a large number. Oh, there's a. Yes. Hey, Alexis, good afternoon. Good to see you on today. All right, we're doing some revision of control accounts. So we just went through like the format and layout and the logic behind the debtors control account. All right, about what goes where and why. So we're now going to go to the first example from a past paper. Yeah, good afternoon. How are you doing? Good to have you on. Okay, cool. So you're technically not too late. All right. Sorry, where did it go? Okay, right. So Lara Bryan has a large number of debtors. She keeps a control account in her general ledger. On March 31st, 2009, she extracts the following information. So we have March 1st, so sales ledger, which is the debtors, debit balance, 5,030. Sales ledger, credit balance, 620. So we have opening balances on either side. And we have credit sales, cash and checks received, bad debts written off, discounts allowed, returns in, dishonored checks, interest on overdue accounts. And they want us to do the control account for this one, right? Okay, so what I'm going to do, let's put that to the top. Let's put this below. And what we're going to do, copy and paste that. So this is Lara. What, Jan 2020? Hold on, one sec. It is Lara. Okay. So let me actually just give me one sec. Right. So Lara Brian. Debtors control. Okay. So we got to zoom out because we don't want stuff. Oh, why is my mouse upside down? Right. Okay. I think 150 is still visible for you all. Okay. Hold on. Oh, it's cut off slightly. Join class. You can talk about that. Cool. All right. So, if you have your format, I would suggest you use the format for now, right? Use the format, but the more you practice it, is the more you should become familiar. Because as you know, you can't carry formats in the exam, and unlike maths and art maths and maybe physics, you don't have a formula sheet. So you have to know what goes where and why, right? And as you can see, not every question will have every single item that could possibly go into the account. All right. So let's that's 150. I'll scroll up. Okay, cool. So it says sales ledger debit balance, right? So what we could do, we could just actually just kind of use this one, right? So the opening balance is 5,030, right? So this 5,030 is sales ledger debit balance, right? That's the debit side. All right, let's take out the X's, right? Right. Sales ledger credit balance 620. So that's at start, right? So that's just gonna go here. Right. So the regular debit balance is the amount of money your debtors owe you, right? And I mean that's why they're debtors in the first place, because you made credit sales to them, they owe you money for the goods, right? Occasionally in the interactions when they pay you, sometimes they might overpay. And if it is, for example, they overpay before you could pay and they didn't pay them back yet, you owe them money. So of course we have to account for, explain that. And how we would do so is show on the credit side that, hey, we have money for them. And anytime you have money for anybody, that's a liability. And liabilities have credit balances, right? So it's, like I said, it's a kind of irregular item in the account, all right? Right, so we have the first two items. Now I'll take out the highlights. Sorry. Okay, and it says credit sales for the month. All right, so credit sales is $54,010, right? Credit sales, $54,010. Cash and checks received, $47,100. So that's the receipt from debtors, right? Cash and checks. So what I advise people to do most times is use the same words that they give you in the question. So if they use cash and check received, you could put that here. If you prefer to use receipts from debtors, which is what cash and check received is, you are very free to write that. Nothing is wrong with using proper terminology, right? Wait, I have to, let me kind of unalign those from me in the center, right? Right. Okay. All right, and I'm checking. So Google Meet, I know I just asked, so they were asking you again, right? Just give me a quick G if you're good with what I have on the screen so far, please answer. All right. 1 second. That's 10 out of 14, 15 people. The next 4 or 5, please let me know when you get a chance. Okay, right. So we have the two opening balances and the other two major interactions with our debtors. Us selling to them on credit and then paying us back for some of it. Right. Now what else we have? We have bad debt written off 25.7. So we're going to put that here, bad. Now, it doesn't matter in the order in which these things appear. There's no set order, there's no set sequence. You can put them however, right? So for example, just to kind of emphasize that, I'm going to shift this one up here. All right. 570. Discounts allowed, 490. 490. And then returns inwards, 1240. Right? Now again, the sequence in which you list them does not matter. Right? If you for example, like me, you memorize your format and you write out your stuff before and then you plug in stuff after, that's cool, right? If, however, like me, you memorize your stuff so it doesn't matter what goes where and you plug it in as you go along in order of appearance, that's fine too. Right, now we have one more thing here, which is the interest on overdue account, which is 180. Right, so sorry, we have two items. Dishonor checks, right? So we put our one first. Dishonor checks, 980, and interest on overdue accounts, right? Sorry. That's 180, right? Right, so the items we didn't use were the refunds, right? Right. So anytime they don't give you items, you don't have to put them in, right? So you don't have to have those things there. And also, if you notice, there's no closing balances, right? Now, this is where we get a little pushback, right? So yes, they usually give you the opening balances, and normally there's two. Sometimes they only have a debit balance, which is perfectly fine. So you're not always going to have an opening credit balance. And same thing, you're not always going to have a closing credit balance either, right? So unless they specifically tell you to find that balance or whatever the case is, or they give it to you, right? It's never bound to be there. All right. Okay, cool. So what we could do, once again, let's just pull that one up there. All right. Okay, so now we want to find this item here, which is the closing debit balance. So I'm going to put that one in green. Okay, so this will be a little crash course in balancing of a T account for those who may not know how to do it. So what you have to do is you're going to add up each of the columns, the debit column and the credit column, right? Now, again, I would suggest you don't write them, you don't write in your totals here. You can write them somewhere else first, right? So, right, so if you want, you could add it up across somewhere else, right? This one, and then right. Right. So clearly, the debit side's total is greater than the credit side total, right? Which means you have more money, more value coming in than going out. Which means you have you have value left in the account. How do we know how much we have left? We simply find the difference. We subtract, right? And that is the balance. That will go on this side here, 8180. And if you notice now, what happens to the totals? They are the same. So the debit side and the credit side are equal, right? We've balanced off the account. And this balance will come down here. Right? So really and truly, these items wouldn't be here. Neither with this item as well. All right, so this is how it would look. All right, so give me one sec. Let me actually just right, and this one now let's zoom in a little bit more. Ooh, that's kind of big. All right, that's solution 2. All right, Google Meet. If you guys are good with the debtors control account on the screen, just kind of give me a G in the chat if you need me to re-explain anything, any particular item, all right, or any particular items, you can let me know. That's not a problem. Happy to do so. In class, people, are we okay with the example on the screen there? Any questions, any problems, anybody, anything? All right, so what I'm going to do now is, if you guys want to try on your own. Oh, sorry, I want to check my Google Meet. Gate. Right, cool. Okay, one sec. Let's go here. Oh no, right. No, I have to do the creditors because all the others have both sets of information that we have to go through and pick out. That one is one of the biggest T-Fed ones out of all of them. Okay. So, okay, so we have to do creditors before we could go into the other stuff. That's fine. Sorry. All right. All right. So we're going to talk now about the creditors or the accounts payable control account, also sometimes called the purchases ledger control account. Okay, so let's get a little distance between us and the pre. Right. Okay. Right. So once again, normally I kind of let y'all try one, but I remember that I can't do that. Not that I don't want to. One sec. Okay, so creditors or payables. So whereas debtors are people who owe us money, and in this particular case, because we sold goods to them on credit, a creditor is somebody to whom we owe money, primarily because we bought goods from them on credit. Right. Now, anytime you owe anybody money, how do we classify that? As a liability. And liabilities have what kind of balances normally? Normally, they have a credit balance. So, balance brought down. Right? So, this balance here is the regular balance in the creditor's control account. Right? Now, just like credit sales is the primary interaction between us and the debtors, with us and the creditors, it'll be the complement, which is credit purchases. Right? So credit purchases is the major interaction we have with our credit. That's actually why we owe them money in the first place, right? Now, if you buy something on credit, it means you've taken the goods and you've promised to pay in the future. Therefore, you owe them money. Anytime you owe anybody money, that's classified as a liability. And in this case, when you execute the credit purchase, your liability is increasing. And to record an increase in a liability, you have to record it on the credit side. Right? Or the purchases journal. Right. Now, the other major interaction you're supposed to have with your creditors is that if you have to pay them, if you bought something from them and you owe them money, you're supposed to pay them back. If for example, you owed somebody $50 and you pay them back $45, how much you have left for them? $5. But what happened to the amount of money you owe them? Did it increase or decrease? It decreased. When you pay them back, the amount of money you owe them decrease. So it means your liability decreased. So anytime you make payments to your creditors, the liability will decrease. And to record a decrease in a liability, you have to go on the debit side. All right. So this could also say cash and checks paid to creditors or. Okay. So Google Meet, I know it's only 3 items, but I'll take my time. If you guys are good with the first 3 items, just give me a quick GD chat. If you need me to re-explain any or all, give me a R. Let me know what I can do for you. Please and thanks. Right. Okay, so let's go. We have a couple more minutes. Right. So just like we have other kind of secondary interactions between us and the debtors, we have parallel ones here. Right. So if we bought goods and they sent us something that was defective, the wrong size, the wrong color, we would send it back. From our perspective, as it returns out. Right. Right. Also called the purchases returns. Okay, cool. And just like we could try to encourage our debtors to pay us back faster by offering or allowing them discount, the creditors sometimes do the same thing for us. So sometimes we receive discount from them. And if for example, we owed somebody, let's say 125, and they say, just give me 100 now. What they've done is they've decreased our liability for us. They've decreased the amount of money we had to pay them. So that would be here. Discount received. All right. Now, we also have the same other kind of three items here that are a little less regular, but they can be there. So if we take long to pay, too long to pay, and the agreement we signed indicated, hey, if you take too long to pay, we're going to charge you interest or some kind of penalty. If that happens, we end up owing them more money. So if they charge us interest or some kind of penalty, we end up owing them more money, so the liability will increase. And if it does so, we have to go on the credit side. Right. Also, if it is, we wrote them a check and the check bounce, right? We also have to put that here as well. Right. So again, if we didn't pay on time and they charge us a late fee or penalty, you have to increase the liability. This item doesn't actually increase the liability. It kind of puts it back, because if we paid them, it means that we would have recorded a decrease in the liability. But if you pay them with a check and the check didn't clear for whatever reason, we didn't actually pay them. So this decrease didn't actually happen. So we have to kind of undo the decrease, undo the debit. And to undo a debit, you have to credit the account. And then the other one here is refunds. Right? So same thing. If we end up paying them too much, the debit entry is too high, they have to pay us back some money. And that the counterbalance will therefore go on the opposite side. Sorry, my wife is calling me. Give me 1 sec. Hello? How much you need? Okay, you're coming for it now? Okay, you're now dropping. Okay. Okay, cool. Okay, cool. Yeah. Okay. All right. Right. So balance, right. Okay. So these are all the regular items, right? Oh, sorry. The last one would be the balance carried down, the closing credit balance. So balance down. Right. Okay. I have a couple more things to put inside there, but I have to run upstairs for my wallet real quick. My wife asked me to just give her some money for gas. So just give me 2 minutes. Sorry, guys. Hey guys, I'm back. Sorry about that. Right. So now we have the couple of slightly irregular items. One would be the opening debit balance, right? So again, creditor is a liability. Liabilities have credit balances. But sometimes if we, let's say we overpay them and they didn't get a chance to give us a refund, they end up owing us money. And as an asset, and assets have debit balances, right? And of course, you could have a closing debit balance. Let me see the question. Okay, we have a semicircle, right? The angle in a semicircle is 90 degrees. Right. So you have a right angle triangle. You could, or you could just use Pythagoras theorem. Because cosine of 90 is actually 0. So you have these two values, so you could plug in Pythagoras and find the diameter. And to find radius from diameter, just divide by 2. Right, I'm going to put it here. Right. And the last irregular item is the other half of the set off that Sequoia was asking about. Right. Ariel, how you doing? Good to see you, man. Kira. Right. So set off or contra entries, contra entry rather. Right. Red. And hold it. Right. Yes, but not that you have to know for CSEC maths. I kind of made it up. Yeah. Yeah. Now, to be fair, I don't know if somebody else discovered it before me, and I've never published it. Sure, at some point in time. Yeah, I should. And it's been about 11 years I've found it, so I really should put it up. Right. Okay. Cool. Right. So this is the quote-unquote format for the creditors or accounts payable control account, also called the purchases ledger control account. Right. Okay. So Google Meet, you know, if you guys are good with that, just kindly give me a quick G in the chat. If you have anything at all, give me a R if you need me to re-explain. Oh, thanks for the follow, Kira. Appreciate it. All right. Ladies and gents on the inside, are we okay with the control account logic here for the creditors? Yeah? Okay, cool. Right. One sec. I'm going to print out for you guys the question we're going to do now. Yes, it is Somerset. And I want 1, 2, 3, 4, 5, 6. Boy, almost Odin son, boy. Almost Thor's brother. Oh, thanks for sharing, Sam. I appreciate it. All right, so ladies and gents. Right, so this is a question we're gonna do now, right? I'm gonna kind of walk you through it. If anybody wants a little minute head start, if they want to try it on their own, feel free. Oh, wow. Sorry. All right, let me give out these things here. Okay. So, like I said, I'll give you guys a minute or two if you want to. Anybody wants a head start to try it on their own. But I'm going to be going through it shortly, right? Because it's the first one, so really and truly should do an example, you know. Cool. All right, cool. Hey, Kenny, how you doing? Lara. Anderson 125 again, boy. Moving on. All right, cool. So I had to kind of modify the question a little bit, as you probably could see. So let me just push this down here. Okay, so we have a couple things. Actually, can we? Yeah. 150. Okay, we'll go at 150. Hold on. What does 125 look like? Okay, 125 isn't bad. All right. This is Somerset. All right, cool. Okay, you know what? I'll do that. That's fine. Let's go out to about 150. I guess that could work. Okay, cool. Let's take out all the Right. So the first item, creditors ledger control account credit balance. So that's going to go on the credit side. Creditors ledger control account debit balance 1450. That's going to go on the debit side. Now, as you can see here, they give you stuff kind of all out of order. But again, it doesn't matter the order in which you put things. All right. So returns out. So we're going to put that here, 1200. Purchases. Ignore for the quarters. So just purchases. And we could assume, unless otherwise indicated by the question, that that's credit purchases. Right? There was no other information in the question to indicate that there was not credit purchases. Right. Next, payments to creditors, 100,000 and 300. So 100, 300. Right. No. Right. Refund by check from creditor due to damaged item 11. So refunds go here. Discounts received here. Check returned by creditor presented too late to bank. So that's dishonored or return checks. Sorry. No. Right, set off 620. And received from creditor due to overpayment. So that's kind of like a refund again, eh? That's that'll go here. Right, so if we overpaid, that'll give us back money. So check the value for return out. Okay, thank you. Returned out. Yeah. Right, so when we pay them, it would initially go here, right? So if we overpay them, it means that this debit entry is too high. So when they give us back money, that will on the opposite side. Okay, think about the cash book. If you receive money from whoever, it goes on the debit side of your cash book, which means the other account affected has to be credited. So you credit where the money coming from and the debit where it's going. So the money is coming from the creditor, so you credit here. And it's going to bank or cash, so you're going to debit there. All right? All right. And thank you, John, very much for pointing out the 120. Right, left, up, down. Right. We had any interest on overdue payments? Nah. Okay, cool. Right. So we had no. So again, we don't know what the closing debit balance was. I mean, if there is a closing debit balance, they have to be very specific and tell you. 1 second. Yeah. Okay. Right. Right. So we didn't have any interest on overdue amounts, otherwise it would have gone there. So we can take it out. Right. Okay. Right. So now we have to balance off the account. So same thing, right? So what we're going to do, we're going to add up each column independently, right? So clearly, the credit side has more value than the debit side. So we need to add a figure here. What is that figure, right? So there's the credit total here. There's the debit total here. And we find the difference, that minus that. Right. Bring the balance down on the next side. Yeah. All right. Hold on. Give me 1 sec. I'm going to send you guys, I'll pick up the question. That's that, and that's the solution. Oh, I think disappear and then come back. Yes, what is going on? I need a new phone. Long story short, that is the case. All right, Google Meet. If you guys are good with the solution on the screen, please give me a G. If you need me to re-explain any particular aspect or the whole thing, let me know. It's not a problem. But you let me know. Sorry. Boy, I get 12 out of 13 people. Nice. All right. So folks, we've done 2 examples, walkthroughs. So now I want to give you guys one to try on your own. Let me just check which one that is real quick, because it's not this one. Actually, this wouldn't be a bad one to do, you know. 2014, not 2014. Jan's is 2020, Jan. This would be a nice one to do. No, not this one. That's the one I don't like. Was it? No, it's the 660. It's that one. But these 2 are like kind of carbon copies. They were like 5 years apart. And this was the long one that had almost everything. That was the whole question, full 20 marks. Okay, so you know what? Maybe we use this one, John's place. Give me 1 sec. Right, hold on. I just want to confirm if John's I want to do. Right, now what they do usually is they give you information for both sets of accounts, right? And what I would suggest you do is you do one account at a time, right? John. Yep, John's. Okay. Oops, what is this now? Oh, okay. Kayla printing some papers for her class and might take a little while. So, yeah, guys. Okay, so what I'll do, let me send a picture of this in the chat, and I'll leave it up on the screen. All right. And I'll zoom in a little bit. Okay. All right, folks. So I can't print that out for you because the printer currently in use. So what we'll do, I'll leave it up on the screen. Let's take a little read through. And if you have any questions, you could ask them beforehand, right? Let me zoom in as well. Right, so the accounting department of Jan's Place provided the following information from its various books. If I do that, I'm blocking. Okay, 150. Then 150 could work. So I'm kind of blocking. Watch. Right. Okay. So Jan 2019 is clearly the opening balances, and December 2019 is the closing figures for the total for the year. All right. So you have credit sales, credit purchases. So this item here have accounts receivable as the opening debit balance in the debtors control. This 5460 is the opening debit balance in the debtors control, and accounts payable is the opening credit balance in the creditors control. Right. So you have cash and checks received from receivables, checks paid. So basically, yeah, discounts allowed, that sales returns, interest charged on late payments from credit customers, refunds for, okay. So basically, it looks like all of the odd numbered items are for your debtors control, and all of the even numbered items are for your creditors control, right? So ideally, I want you all to do both of those control accounts real quick. All right. If you can't get both of them, we're starting with the debtors, right? So I'll give you about 7 minutes for the debtors. All right, so start with the balance brought down, 54.60 on the debit side. Good. Was okay. All right, cool. No, that's not me. Maybe we're good. All right, so you're doing the debtors control first, then the creditors control. While you're doing that, let me just staple up some papers for maths class here real quick. May 2023 paper today. Seju farm, even the Seju farm. What are you doing? I think I had some Seju. Sirjoo. Over the years. I never Victoria, but she's doing one-on-one with well, yeah, one-on-one of my classes. We got Christina as well. What's when she went holding him? I remember her name. Hold on, Emma. Jesse. She opted out because the online wasn't working for her. Yeah, that was the COVID class. Chantal, how are you doing? I'm fine. Thanks for asking. How are you? What is short for? Just curious. I had a Samara in the class. It was S-Y-M-A-R-A. Apostrophe. Finish? Okay, cool. All right. I promise 7 minutes, so I'll give 7 minutes. Oh, thank you. FCB. Out of paper again.
If you like, do they might as well put it through different
In my opinion, I will never find it realistic to expect any student. I would expect the things here. So what they do is they have a curve, but it will be slightly thick to accommodate variations there. So unless you do like a dot or like straight line, a straight line, once you try to draw a smooth curve, you should get a mark. Right? If it's very, very poorly done and you have it.
Yeah.
That goes side. Okay. Hello, Bella. How are you doing? Have you on? Hey, Javi, how are you doing? Okay, so I was gonna push this up a little. Actually, maybe give you guys the full time up till 6 and just pull the solution I have done previously. Okay. All right. So to maximize the amount of time you guys will have to try the question, that's what I'll do. Right. So do the debtors control and then the creditors control, or whichever one you want to do first, and then second, we'll do both of them, and then just before 6, I will pull up the solutions. Right, and I'll send pictures in the chat and you send, right? When we come on Monday, we could continue to do more of these questions because I think just doing 1 or 2 questions is not enough. All right. Oh, sorry about the noise, guys. That's just me stapling papers. 5 minutes. Okay, so I'll give you a couple minutes again. Yes, but it's not tested on 22. It's only multiple choice. Oh yeah, you had some more there. Yeah, you do your thing. All right, later. All right, let me just pull up the 2024 workings one time and pull Jan's, right? I'll actually move Jan's across to the next book. Create a copy. It is. So to me, the IA is supposed to be like a research project where you have to go to a business and ask some information. What this looks like to me is just like a almost like what used to happen before the syllabus changed. Like they used to give them a test for each module and then take that mark as the IA mark. So like here, like and she said not to use a questionnaire. So how are you supposed to find out? Like if you look at the objectives and the aim on this thing, right? You're supposed to assess the long-term sustainability and the impact on like job satisfaction. How are they doing any of that with the information given, right? Are they just going to make it up? And if she said not to use a questionnaire, how are they then going to get the information from the what you call it, the employees? How are they supposed to assess that long-term impact, the sustainability, and all that stuff? How are they supposed to assess any of that? Because it doesn't make any sense to me, but that don't mean it don't make sense. If you catch what I'm saying, I'm trying to get it to make sense to me, which it's not doing. I even asked my teacher, who has way more experience than me, and he said this is not a suitable SBA. But like I say, everybody seems to have their own opinion about what paper content SBA should be, and they have lots of different opinions. Right. Okay, folks. Sending Johns for you all. Right. Okay. All right. Yeah. So here, as you could see, we had minimal stuff and we had to find the closing balance. So even if you didn't find the closing balance, if you look at the other items, right, and put them on the correct side, you get most of your marks, right? How many marks was the question? question. Oh, I didn't put the marks awarded for it. Okay. In any case, yeah. So yeah, even if you don't balance off the account and you just put these items here, you get most of your marks. Yeah? Hey Jerry, you know what you're doing. Right. Okay. So anyway, Google Meet, I'm gonna put a pin in it for today, right? When we come back on Monday, we're gonna continue control accounts, do as many questions as possible. If you guys have any questions and you get to ask in class, please feel free to message me, right? But I'll log on off now because I have maths in about half an hour. If any of you are joining me for maths, I'll see you all about that time. We start in the May 2023 paper today. All right, guys. So if I don't see you all there, have a good weekend, and I'll see you all next week. Bye. Okay, later. All right, YouTube. What's overhead absorption? It's coming from YT Trends. YT Trends, if you're still there, here to do, email me, chris@adaptuition.com. Right? Or find me on Instagram. It's the same thing, adaptuition, TikTok, whatever. Message me, and I'll see if I can help you out. Right? But I had to log off now because I have a